Welcome to the Deep Dive. We're here to unpack some big global headlines, stories that might seem far off, but actually have some surprising connections to your world.
That's right.
Today, we're digging into three really interesting and kind of interconnected economic shifts. We've got a major Japanese company pulling back from a huge wind power project. Then there's the U.S. government thinking about, well, owning parts of nuclear companies.
Yeah, quite a move.
And finally, India. Incredible growth, but also facing new U.S. trade tariffs and currency issues. So, our mission today, cut through that noise, find the key insights, and help you understand, the so what behind it all.
And what's really fascinating, I think, is how these things that seem totally separate, they're actually part of these larger trends. We're seeing governments, corporations, everyone trying to adapt really fast.
Adapt to what, exactly?
Well, changing global landscapes. Everything from securing energy supplies to making sure supply chains don't break down again. It's complex out there right now.
Absolutely. These landscapes aren't just shifting, they're forcing countries to rethink basic economic strategies. So let's start with Japan. That green energy challenge, it feels like a reality check, doesn't it?
It really does.
We're talking Mitsubishi Corporation, huge company, Warren Buffett's invested in them.
Right, a giant.
And they suddenly pull out of these massive offshore wind projects in Japan. Now, here's the thing that gets me. A project meant to power over 1 million homes suddenly just stops. How does that happen?
That's the core question, and it tells us a lot. Basically, the project costs. They more than doubled from what Mitsubishi first bid.
Doubled.
More than doubled. Imagine, like, you budget for a new car, right? You picked it out, got the price. Then you go to sign the papers, and the dealer says, oh, actually, the price inexplicably doubled while you were sitting here.
Okay, that's not happening.
Exactly. But scale that up to billions of dollars. That's the kind of shock they were facing.
Wow. Double the cost is just staggering. Was this completely out of the blue? Like a perfect storm? Or were there maybe signs the first bids were just too low?
I'd say definitely a perfect storm, but, one that maybe highlights some risks across the whole industry.
Okay, so what was in the storm?
Well, first, the actual wind turbines, the equipment. Prices soared. Then you had all those global supply chain snarls we've been seeing. Delays, higher shipping costs, like dominoes falling.
Right, the ripple effect.
Exactly. Plus just general inflation, making everything, labor, materials, all of it more expensive.
Okay.
Then throw in unfavorable exchange rates, which hurts when you're buying parts from overseas. And finally, rising interest rates. These projects need massive loans, and higher rates make that borrowing much, much costlier.
Okay, so it was just everything hitting at once. What did this actually cost Mitsubishi, pulling out like that?
The direct hit was about 52.2 billion yen in restructuring costs. That's roughly 354 million US dollars. Yeah. And their partner, Chubu Electric, they're looking at a loss too, around 17 billion yen. And remember, these weren't small projects. We're talking electricity for about 1.5 million households.
1.5 million?
Yeah. So it's not just a company loss. It's a hit to Japan's energy plans.
That's a huge amount of power. So what does this pullout mean for Japan's bigger green energy goals? They had pretty ambitious targets, right?
They certainly did, and this puts a dent in them, no question. Japan was aiming for 10 gigawatts of offshore wind by 2030, then 45 gigawatts by 2040. Ambitious stuff.
Yeah.
This withdrawal definitely puts those targets under pressure. The government sees it as a serious setback for their energy security.
So what are they doing about it?
They're moving fast. They plan to rebid the sites for these projects. And they're even making the deals potentially more attractive by extending the permit terms from 30 years up to 40 years, trying to improve the economics for whoever comes next.
Okay, so they're trying to salvage it. But this isn't just a Japan story then, is it? What's the bigger takeaway here for, green energy globally?
That's right. It's not just Japan. Some experts are saying, okay, maybe this is a needed rebalancing. A tough lesson for an industry that maybe got a bit ahead of itself with optimistic bids.
A reality check?
Kind of.
Yeah.
Could lead to a stronger industry long-term, maybe. But it's also a pretty stark warning globally. It shows just how risky and complex these huge renewable projects are. Aggressive bidding can backfire spectacularly.
And for our listener, for you listening right now.
Yeah, for you, this story from Japan, it's a clear signal. The push for green energy is bumping up against some hard economic walls. Inflation, fragile supply chains, high costs.
Sort of affects the pace?
It likely
Yeah,
affects the
I
base,
guess.
yeah, and potentially the cost. It means every country, including the U.S., has to deal with these realities. It might mean a slower, maybe more pragmatic energy transition than some hoped for.
Hmm.
And eventually that could ripple down to, your electricity bill.
Right. So if Japan's story is about the hard economics of green energy, our next story shifts to the U.S. and a very different approach to power, nuclear. And well, it's pretty bold.
It is. Definitely raises eyebrows.
We're talking about the White House seriously considering taking direct ownership stakes, actual equity in private nuclear energy companies,
Hmm.
especially companies working on nuclear fuel and those developing small modular reactors, SMRs. Now, this isn't, your everyday government policy. The government is a shareholder. Why? Why now?
Yeah, it's a big question, isn't it? What's pushing the government towards this, some are calling it national capitalism.
Right.
There are really two massive drivers here. First, just skyrocketing demand for electricity in the U.S.
Ah, the AI boom. Data centers.
Exactly. Data centers, AI, plus general electrification efforts.
Yeah.
They all need huge amounts of power, and they need it reliably and soon.
Okay, so nuclear, especially these smaller SMRs, could help meet that demand. But isn't nuclear traditionally really slow and expensive to build? Can it actually help with this current surge from AI? Seems like a mismatch in timing.
That's the big challenge, absolutely. And it leads right into the second major driver, energy security, national security, really.
Yeah, so.
The U.S. really needs to cut its dependence on countries like Russia for specific types of nuclear fuel, particularly something called HALEU, high-assay low-enriched uranium.
HALEU. Okay.
Yeah, it's the fuel needed for many of these advanced reactors like the SMRs everyone's talking about, reducing reliance on Russia for that. That's seen as critical.
So the government sees it as vital for national security.
Precisely. They've already taken steps like an executive order aimed at rebuilding the domestic nuclear industry base.
Hmm.
Taking equity stakes. That's like putting direct government money in to speed things up dramatically. Trying to overcome those old hurdles of cost and time.
So it's about accelerating things, using government capital directly. Is there, like, a precedent for this? Has the government done this before? Become a direct investor like this?
There is, actually, and it's very recent. The government took a nearly 10% stake in Intel.
Oh, right, with the GPS Act money for semiconductors.
Exactly, using GPS Act funds. So that move kind of signaled, okay, the government is willing to step in directly, take ownership in industries it considers strategically vital.
Okay, so semiconductors, now potentially nuclear.
Think of it like this. Imagine the government decides to buy a share in the town's main bakery. Not because they want to bake the bread,
Right.
but because the whole town desperately needs a reliable supply of bread. Maybe there are shortages, and that bakery is the only one that can guarantee it. They invest to make sure the bread keeps coming.
That makes sense. A strategic investment to ensure supply. So have they named any companies? Or is it still just talk?
No official targets named yet. It's
Mm.
still under consideration. But, people speculate. Companies like Centrus Energy, they're big in that HAEU fuel we mentioned.
Okay.
BWX Technologies, they make critical nuclear components. And maybe SMR developers like Oklo. These are the kinds of players who are key parts of that whole nuclear ecosystem they want to build up.
Right. This whole idea, though, it must spark a huge debate. Government stepping into the free market like this. What are the arguments for and against?
Oh, absolutely. Huge debate.
Mm.
So the argument for it, from that national security and supply chain view, is that direct government money could turbocharge building this vital nuclear infrastructure. It lowers the risk for private companies.
Makes it easier for them to invest.
Exactly. Lower initial risk helps ensure we have the energy we need down the road.
Wow.
It could help crack those really high upfront costs and long development times that have always plagued nuclear power.
Okay, that's the pro side. What about the pushback, the free market concerns?
Well, the counterargument is pretty strong, too. Concerns that having the government as a shareholder could lead to, inefficiency, political agendas influencing business decisions instead of pure market logic.
Yeah, I could see that.
Could it distort the market? Could it stifle private innovation in the long run if companies start relying on government bailouts or investments? Some critics see it as really blurring the lines, an infringement on basic private capitalism.
So, a fundamental debate about the role of government. What does this mean for you listening at home? How might this actually affect us?
Well, this potential U.S. move into owning stakes in nuclear companies, It signals a really big shift, maybe towards this national capitalism idea, where controlling strategic industries becomes more important than pure free market ideas, especially for energy and tech security.
And the impact on me.
It's not just some abstract policy. It could directly shape the future cost, and importantly, the reliability of your electricity. If it works, it might mean more stable, maybe even more affordable power, especially as things like AI keep pushing up demand.
Okay.
But it also changes the whole dynamic between government and private industry in a really critical sector. It's a huge experiment, really, in industrial policy. Whether it succeeds or fails will send ripples across the whole economy.
A fascinating experiment indeed. Okay, from the US and its nuclear ambitions, let's shift again. Let's go to India, a country we hear a lot about, for its booming economy.
Yeah, rapid ascent is the phrase often used.
But it's facing this really complex situation now, right? Strong growth at home, but some serious challenges coming from outside.
That's right. It's a really dynamic picture. India just posted impressive GDP growth, 7.8% real growth in the first quarter of their fiscal year, which just ended in June.
7.8%, that's really strong.
It is, especially now, driven by their services sector, good agricultural output, and a lot of government spending and investment, especially in infrastructure. So the domestic engine is running pretty hot.
Okay, strong internal economy. But you mentioned headwinds, challenges from outside, particularly involving the U.S.
Yes, that's the main challenge right now. New U.S. tariffs that kicked in late August. And these aren't small adjustments. Some tariffs on key Indian goods are up to 50%.
50%? Wow. On what kinds of goods?
Things like jewelry, apparel, footwear, some chemicals. These are important sectors for India, major employers.
Yeah.
It's like, imagine that popular food truck again. Business is booming, right? Then suddenly, its biggest customer, maybe the office building next door that buys half its lunches, slaps a huge 50% tax just on its most popular tacos and sandwiches.
Ouch. That
Yeah.
truck's got to scramble.
Exactly. They'd have to find new customers fast, maybe change the whole menu. That's kind of the pressure India is feeling from these tariffs.
That's a serious blow for Indian companies trying to sell to the U.S. Are there other economic pressures squeezing India too?
Yeah, there are. The Indian rupee, their currency, it hit a record low against the U.S. dollar recently, about 88 rupees to the dollar.
Is that purely bad news?
Well, it makes imports more expensive, which isn't great. But there's a sense the central bank might be letting it slide down gradually on purpose. A weaker rupee can actually make Indian exports cheaper, more competitive globally. So it's a double-edged sword.
Okay, a strategic depreciation maybe?
Possibly. And they're also grappling with a huge trade deficit with China, a record $99 billion. That shows a pretty deep reliance on China for goods and components, which also carries risks.
So U.S. tariffs, currency lows, big trade deficit with China. That's a lot to handle.
Yeah.
How's the Indian government responding? Especially to the U.S. tariffs. Are they just taking it?
Oh, no, they're definitely not sitting still. They're actively trying to diversify who they trade with, looking much more towards Europe, the Middle East, Southeast Asian nations, ASEAN.
Spreading their bets?
Exactly. And strengthening ties with other big players, too. Japan, for instance, has pledged a huge investment, 10 trillion yen. That's about, what, 68 billion U.S. dollars?
Yeah.
We're seeing big tech investments like OpenAI planning a massive data center there. And interestingly, there are signs India is trying to re-engage diplomatically and on trade, even with China. Despite that deficit, it looked like a very pragmatic, multi-pronged strategy.
It really is striking. They're not just reacting. They seem to be actively trying to reshape their place in the global economy, finding new partners, navigating these tensions.
Absolutely. And if you connect this back to the bigger picture for everyone, India's situation, it's like a live case study of global trade shifts and that geopolitical balancing act.
How nations adapt.
Exactly. How they adapt to protect their economies, find new friends, and keep growing, even when facing big external shocks like tariffs. And this matters to you because these shifts affect global supply chains.
Where the stuff we buy comes from.
Right. The clothes you wear, the electronics you use. As countries like India adjust who they trade with and what they produce, it can change the availability and the cost of those goods right here.
That really brings it home. Okay, that wraps up our 3 deep dives for today. We went from Japan's green energy reality check to the U.S. government's potentially game-changing move in nuclear power.
Bold strategy.
And finally, India's intricate dance between growth and global trade pressures. 3 very different stories, but you can really see the connections.
You really can. What's fascinating is how all 3 show governments getting much more hands-on actively trying to shape their economic destiny, you know?
Yeah, managing energy, securing supply chains, navigating trade wars.
It's a clear trend.
Yep.
And it really leads to a big question, I think, for you, our listener. As you think about all these forces, governments stepping in more, global trade shifting, what impact do you think this growing government intervention in key industries will actually have on the global economy over, say, the next 10 years? And maybe closer to home, how might it affect your life, maybe even the cost of your energy or the goods you buy every day?
That is a great question to chew on. It really underscores how linked we all are to these global currents. Well, thank you for joining us on this deep dive today. Keep questioning, keep exploring these shifts, and we'll catch you next time.